doing your corporate thing, because if it was left to me alone, I'd have said let's do this another time. All right. So this is what I've been looking at. We're gonna go through this one real quick. So did y'all look at this? Tilray, the cannabis company. Did you
Yeah,
have a chance to look at it?
yeah,
Okay. So I looked at it and I looked at a few contracts, right? They have earnings, I believe, on the 1st of April. So I chose a 4/19 expiration just to give it some room. But as you can see, the IV is high, right? The IV is high. Um, the delta is decent, gamma is decent. Um, and this is what like I was. So you saw I was clowning some guru on Instagram. This is basically what they do, right? You can add this to your watch list, and automatically when the market opens, it will start counting. But say micro strategy. That's why I posted. Why can't this? Okay. So you see micro strategy, right? The stock is high and is going to continue to go up higher. But if you look at the contracts, if you buy in leaps, it's very expensive. Like the average person is not going to be able to get in. However, you can add it to your watch list because the watch list doesn't require anything. All you have to do is click watch list and then boom, you're going to be in that contract. But the thing is, do you have the money to get into the contract? Was the strike price right? Was there enough volume? Was there enough people selling? If you look at the what is odd to you on this screen, the micro strategy screen right now, like what stands out? Y'all still see my screen, right?
Yeah, other
yeah.
than the high prices.
The share
Yeah,
price. Yeah,
besides
The
the
volume,
besides the
The
price,
volume is
the
low.
volume.
yeah. So that's nothing really, Well, granted, the market is closed, but if I was to pull up the open interest, you will realize there isn't a lot going on, right? So you may see this and be like, let's say you could afford it. You see it and try to get in or whatever, hope to get in, and you may not get filled. But somebody using a watch list can just click on it, and a watch list is going to get filled because there's nothing to fill. It's just tracking it. So even though there might be a non-existent volume, no activity going on, somebody who is just watching it is still going to be able to track the performance of that stock. Meanwhile, the person who had real money to get in may never be able to get in because there was no volume. So I just wanted to speak on that. But let's look at this Tilray thing. Tilray brands. So this was what I was looking at. Let me expand a little bit. So this is the daily chart. Daily chart. Let's go to weekly. The weekly is what I like the most, not the daily. So do y'all see the weekly chart? Y'all see that?
yeah, yeah. We see it. We see it.
Okay. So it looks something like this. And then I move it here. So It looks like there's a clean, ah, it'll expand it. And how did it lose? Oh, damn. Let me change it to weekly. Okay. So this is what I'm trying to play, right? Because it's giving me like this, right? So it looks like this has been 167 or whatever has been $1.65 has been a pretty strong support level, right? And as you can see, look at that level. You will notice that price has found it difficult to close below that level. And this is a weekly chart, right? So let's put our line here, put our line here somewhere, right? This is October 23rd, October 2023. And then right here, July 2023. So since July, price hasn't been able to stay below the 167 level, right? So now that they have earnings coming up and we have this double pin bar, it's showing a rejection. It doesn't mean that it can't go lower, but it looks from a price action perspective, it looks pretty good, right, to get into a call. But with oh my goodness, with a situation like this, you want to give it enough time. You don't want to cut it too close. You don't want to. They have earnings on April 9th, right? So you don't want your expiration to be April 10th. Ideally, if it pops before that, you can close it before the data comes out, or you can give yourself enough time, enough expiration for, room for any error. So I'm going to be watching this. Let's go over what other trades are we in. Let's go over that real quick. Mara. Who's in Mara? Anybody in Mara? Mara.
I'm only in Mara Leaps.
Leaps, okay. So that's what I'm seeing on Mara, right? Something like this. So it looks like so far it's price is respecting this level here. Is this better than the Discord sharing screen? So
Yes, much better.
Yes,
It
it
is.
It look
is.
way clearer.
Yes.
really?
You know?
Yeah,
Yes.
bigger.
Damn, everybody like, yeah, okay, I can't even. That means I guess it is what it is. So like, let me change it to a line. So whenever I'm looking at my levels, I prefer to use a line graph, because a line graph doesn't factor in the lows, like the pins. It factors in only the closes, which gives you a very clean, like where is price closing. So if you look at it like this, initially I'll use a line graph to plot the levels to get an idea of where support and resistance levels are. And then I'll switch it to a candlestick. And once I switch it to the candlestick, now I can get more details of the candles and what it's doing. And right here with Mara, right here, what do you see? What is this?
An
I-
engulfing candle.
What?
A bullish engulfing candle.
Okay. Why is it bullish engulfing?
Because the market's about to go up.
Because it's taking up 2 candles.
Yep. So you see the low of the green one, the lowest point it made is lower than the lowest point of the previous one. See that? The lowest price. And then the highest price here is higher than the top of the the red candle. So it makes it an engulfing bar. And also an engulfing bar, it's not just, it's not just engulfing just because it's bigger than the previous one, but it also matters where it forms. So it has to form at some sort of support. If you see an engulfing bar in the middle of, price moving, it's not as effective. Let me see if I can see an engulfing somewhere. It has to form at a level of support. So even here, there's an engulfing bar here, right? Right here. Do y'all see this one? This is right here. You see this?
Yeah.
Yeah.
So that's an engulfing bar, right? But it was still a level of support. So this would have been a good signal to take because the engulfing bar formed at support. The market broke up, came back down, and it created an engulfing bar at support. The same way this is an engulfing, bearish engulfing bar at resistance. You see this one? This red candle right here? Y'all see it?
Yes.
Okay, that is a bearish engulfing candle. And it's most effective if it forms at resistance, right? Resistance. That is a ceiling. So the market went up, 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 and then it formed a solid, strong red candle that engulfed the previous candle. So typically when the bottom of that candle breaks, the market will come down. But this level here was also a support level. So let me see how it looks. You see like right here, if I move this up here slightly, over here, the reason why you see over here, December 29th, 2023, you see price came down to that level, 22.79, and it bounced. Then it broke through, came up, and then it bounced at that level again. So that would have been a solid level to pay attention to what type of candlestick forms there, right? So bullish engulfing, bearish engulfing, even here, this is another bearish engulfing. And you see the bearish engulfing formed. It engulfed 1, 2, 3, 4, 5, 6 candles. And once the bottom of that candle broke, the market went down. And it went up. And then over here, what do you see here? Anybody over here?
Is that another engulf?
Yep. Another bullish engulfing right here. So if I maximize it, you see it?
Yes.
Okay, because again, the bottom and the top.
Okay, the tail. Okay.
You see that? But
Yeah.
also where it formed matters because it formed at the market had went up, came down, and I can actually do let me do a replay and see if you're doing the peasant trading view, you don't get access to the replay. You gotta pay, you know. But basically, let me see if I can slow it down. Replay. Here. Let's here. So we're gonna start at the bearish. So this is a bearish engulfing. Let me remove these lines so you can see. And let's play. So you see that? You see it came over here when price came over here to this level, it started rejecting. So now at this level is where you want to start looking for what would you looking to what would you be looking to do at support? What type of
Buy.
exactly? But you just don't want to buy, right? Just blindly. You just don't want to jump into it and just buy. You need some sort of confirmation, right? Exactly. Confluence, signals that are telling you that it's likely going to go up. So it could be, prices above the moving average. It could be RSI is oversold. It could be a pin bar. It could be a bullish engulfing. It could be, you know, whatever other candlestick formation. But you want to wait for the price to come down to your level, and then once it gets down to your level, you wait to get a price action confirmation. And this is on a daily chart, right? So let's see what happened afterwards. So it looked like it was holding, right? It was holding. So at this point, if I'm watching it, this is the point where I'm gonna get in and start looking, right? So if I say I'm watching to get in, but am I convinced yet? Have I seen any pin bar? Have I seen any bullish engulfing bar? Have I seen any inside bars? Have I seen any fakies? There's a whole bunch of price action signals that I'm waiting to see to make my decision. So I'm not in yet. I'm still looking, right? So now once this jumps here, I can say, okay, it looks like we are going. So now I can decide to get in. So let's say I buy Mara, like, okay, boom. Mara, it looks like we going up. So I'll get into Mara. Let's say Mara, but I would decide at this point, you got to decide which strike, right? What strike price are you going to choose? If you choose a strike price that is here, let's say you choose a 32 strike, but your expiration is, what day was this? This was January 26th. Let's say you choose a 32 strike, but your expiration is February 2nd. You doing too much, right? You're not giving the market enough time to get up there. You're being too aggressive and unrealistic, right? So if you find a good level of support and you find a good price action signal, you still want to give yourself enough time, right? And this is where you factor in is earnings, right? When do they have earnings? If they have earnings, maybe you want your expiration to be before the earnings so you don't get disappointed, or you can go way after earnings, right? But the further you go, the more expensive the premium is going to be. The closer you stay, the cheaper it's going to be, but the more unrealistic it is, right? So I'm just giving you like a step by step of how you would analyze the market if you're trying to buy options. Like you have to look at the price action, look at the levels, choose a strike. So if you were to choose a strike here, let's say we at 17 and I choose like an 18 strike and I give myself, a week or 2 weeks, it's more realistic for me to see some profit. So let's play it and see what happened. Let me remove the levels. Is that making sense, by the way?
Yes.
Okay, so let me play. So let's see what happened. So it went up and then, okay, so you see what happened? So right here at this level, go back. Right here at this level. See, when price did this again, this would have given me more confirmation. Why? Can somebody tell me why?
Because the buyer stepped in and the support held.
Good. Anybody else? Anybody else?
Go through the trend line.
Yep.
The RSI is very low. It's about to bounce up.
RSI. It's
Yeah,
not
the buying level. Oh no.
it's not too low, but I mean, from my perspective, is because of this trend line, right? So price went came to this level here. It tried to go up. It didn't quite make it. Oh shit, is my battery? It didn't quite make it, right? And then it came down to that trend line. So this is confirmation that the trend line is a solid trend line.
But Block, so if our trading view is not set up like this to have these trend lines, what other, I guess, way would we know that okay, the market's about to go back up besides the trend line?
What do you mean if your trading view is not set up with?
So like the trend line is that blue line, right?
Yeah, that's the trend line that I drew.
Oh, okay.
Yeah, yeah, this one, this one.
Oh, okay.
Yeah. So it's just me paying attention to patterns on the chart to see where price is likely gonna pivot based on previous reactions or memory.
Oh, okay.
But
So
yeah,
basically it came back to the price it was before it bounced to go back in the opposite direction. That's what you're saying?
right. And it looks like it's respecting that trend line. So I don't know yet, right? It's like, okay, this is a first, like over here was the first touch. So it touched here, it bounced. So I'm trying to see if it's going to respect the next touch. So it can do something like this. It can do something like this, right? It can even go up here. Like, I don't care. The main thing that I'm looking for is if it comes back down here, it respects this level. Like, it doesn't break below this trend line. So long as it come down here and it bounces from this trend line, I know that the trend line is solid. So that's all the trend line is doing for me. And the trend line is serving as a dynamic, like it's a support, basically. Because a support level can be this, a support level can be this. It can be this, or it can be slanted, right?
Okay.
This is basically a slanted trend support. Because support is basically a level where there's demand in the market. So it doesn't have to be a horizontal line. It could be slanted. But so long as price is respecting it, then you can take trades from that level, that zone. So that's why I draw the trend line to see if it's going to respect. So now let's play it and see what happened. So you see it bounced from that level, right?
Mm-hmm.
And then at this point, this could have been a put.
Another engulfing too.
Exactly.
Engulfing bearish to let us know it's going back down.
Exactly. So you could have bought a put. You see
Yeah.
what I'm saying? I don't do puts, but if you are versatile enough to not be biased in your brain, and it doesn't, like, my brain doesn't help me to do puts, but I see it. You see what I'm saying? Like, I recognize it. So if you in a buy, and let's say you got greedy and you didn't take profit, after seeing the engulfing, bearish engulfing, even if you're not gonna buy puts, what do you think you should do? If
You should get out.
exactly. So
You about to lose the money that you just made.
exactly. So that could be a signal for you to take profit, even if you don't use it as a signal to buy puts and make money. By taking profits, you still making money. You know what I mean? So you can use it to either get in the market or get out of the market. So let's see how, if we had played the bearish engulfing. So let's say we saw the bearish engulfing. We weren't in a call previously. We saw the bearish engulfing and we like, okay, we're gonna buy puts. So let's see how that will play out. So this would have been the signal, right? This would be the trigger signal. You saw this, you're like, okay, I see a bearish engulfing signal at a swing high. This is a swing high.
Mm-hmm.
You don't buy this anywhere in the middle of like price, right? You want to buy it at a swing high, the same way you want to buy a bullish engulfing at a swing low. So this is a swing high because it's a swing high. This is a high. This is a high zone. This is a high zone, and that is where it rejected. So let's play. So let's just assume that you saw this and you're like, I'm gonna buy put, which means you're betting for the market to go down from here. Let's see how it would have played out.
I would have waited for the next candle though before I decided to do a put.
Correct. But this would have been your guide, right? The bearish
Right.
engulfing is your guide. And this is a daily. So let's factor in that information that every candle takes a whole day to form. So when you saw this candle close, you had to wait until this day. the next day close. The next day still didn't close below the low of the previous candle. But you could have said, okay, I'm going to buy a put. But this is where the strikes matter. What strike are you going to buy, and what time frame are you giving yourself? Are you going to buy a 10 strike and 10 strike with 2-day expiration, or are you going to buy a 24 or a 26 strike? See, the closer the strike, the better it is for you. So if you were to buy a 25 strike and gave yourself maybe like 3 weeks or whatever, that would be a better contract. So let's see how it played out. So do you see what happened here? At some point you were shitting your pants, right? Because
It turned around, right?
exactly, it turned around. You like, block, I'm down 50%. What we doing? Right?
Yeah.
What's up? What we do? I'm cutting, man. I'm down, man. I'm losing money. I'm like, chill, relax, take it easy, right? But if you bought it here, so let's look at the so February 15th, and it went to February 28th. So basically 2 weeks later, you were down. But imagine if you bought a 2-week contract, you lost money. You see what I'm saying? So
Yeah.
depending on your expiration, if you were to have bought a weekly contract, you lost money because you betted that the stock was going down to, let's say, 25. And then it went to 34. You are clearly down by maybe 80%. But somebody who bought the same put and they bought a 25 put, and they gave themselves enough time. Once the market started coming down here, down to 18, 19, 18, 17, they making money. The only difference between them and you is they gave themselves enough time for the market to swing up and down. You cut it too close, so you lost. And there's a visual representation of what happens. But sometimes we only looking at the profits, the P&L, so we don't see from a price action perspective why it's so important to give your contracts enough time. Is this helping, making sense?
Yeah. This also makes me realize that I'm not a swing trader because I don't want to wait.